trading at its best.
I'm Mike Swanson with TradeWest Forex. We're going to be talking today about false breakout strategies. I'm going to be teaching you a strategy today that you can use to trade these false breakouts just like the big players do. You don't have to be the one that gets stopped out on the wrong side before it turns back in your favor. You can actually trade those and profit from them. So I'm going to teach you that strategy today. I'm going to show you how to detect a false breakout, and then we're also going to look at the market structure highs and lows, and we're going to use this information combined with market sentiment that I've been teaching lately, and then I'll also give you that download link again if you don't have the Informer downloaded. This you can download it for free. It's 100% free. It's not a trial or anything. It's all free tools. So I'll give you that link as well, and you can use the tool that I'm going to be showing you today. So let's take a look at what causes support and resistance to hold. Why does sometimes support break? Why does it sometimes hold? The reason it will hold is if there is a large amount of limit orders that market orders can't consume. They can't fill or remove the limit orders from the market. That causes the market to turn the other direction, and then the market orders turn into sell orders. Everybody jumps on and goes short. Okay, so that is what causes the support and resistance to hold. So let's do this. Let's bring up some charts, and I'm going to go ahead and show you how this strategy works. Okay, so I'm just going to bring up a euro dollar, or let's see, a US, I'm just going to bring up a US yen chart that I've got here. Okay, and then what we're going to do is we're going to define the trend first of all. So if you remember, if you've watched my simple trading strategy video or training, we use the 200 EMA to do that. Even with taking counter trend false breakout trades, you're going to be better off only taking them in the direction of the major trend. So we're going to put a 200, you can set it up however you want, but a 200 EMA on the close. That defines the trend. So I see we're in an uptrend. Okay, so we're going to look for false breakouts such as this, where it broke this support, came down. Let's go back over there. The market broke support, this area right here. It broke it, but it only tested a little bit below there. It went down about 20 pips, stopped a whole bunch of traders out, and then turned back to the upside. Well, you can actually buy here. This is in the direction of the major trend. You can actually take a long position here. So there's two things we look at. First is really basic, and then we're going to have a confirmation. The first thing we want to look for is a market structure low confirming that there is momentum shifting back to the upside. So a market structure low looks something like this. Let's get a drawing tool here. Okay, so a market structure low is a 3-bar pattern. Starts with a low, and then the market needs to make a lower low, and then a higher low. You can see it barely made a higher low there. That's the conditions for the market structure low, and then confirmation of the market structure low is when the high of that last bar breaks. So right here you have the signal that you have a market structure low, you've got momentum shifting back to the upside, and by seeing that the market failed to make a lower low, that tells us that buyers are taking action because the limit orders could not be fully consumed. Now we're going to confirm all this and use a filter from the market sentiment indicator that we have on the Informer tool. And that's going to help filter out some of these that don't quite follow through. And let's go ahead and I'll show you this tool. Okay, so here is the market sentiment, and let's see, we are sitting here on the 19th. Okay, so that is right there. That second swing is right here. Okay, that first one, is right here. Now, it looks like it didn't go lower here, but that's because this was a candle wick. This market sentiment chart that we have here on our tool, it's showing you a line graph. On the bar, it's showing you the closes. Okay, so we can't really tell exactly how far that went down. That's why we want to look at our charts, and we can confirm that. You can see right here, market swung up a little bit and then it swung down. That's exactly what this is showing us on sentiment right here. You had the low, it swung back to the upside, and then it came down. And then there was a wick right here. And do you notice, do you see this green area? That is buy limit orders. So when the market right here took a stab down, everybody's thinking it's heading down, and everybody's thinking they're jumping on shorting the breakout. We're just going to wait and see if we're at this green area and we have a lot of limit orders. If we get a market structure low at the same time, that's strong confirmation that the market orders could not consume all of those orders. They're not going to be able to. So we would go long and buy right there where I marked that. So that's perfect confirmation for a long position, which gave a very smooth move up. Let's see what kind of drawdown, what kind of heat you would have taken on this trade before it shifted to the upside here. Oops. Okay, so you've got an entry signal right here on the break of that third bar's high and the market structure low. Okay, so the drawdown on that trade was only about 10 or 12 pips. Okay, so you could have easily had a really tight stop, and that's one of the keys on these trades. Okay, I just took a trade on the pound New Zealand off the daily charts, and off the daily charts I was able to get I think it was a 60 or 70 pip stop, and in a matter of about 24 hours or so, the trade had already went up over 250 pips. So I mean, I'm risking 60 pips was about, I calculated I wanted to risk, I think it was 2 or 3%. But when I'm up 240, that's, you're looking at 4 times what my risk was. So if I was risking 2% or 3%, I'm up 8 to 12%. I was actually up 10% on the trade. So that's why it's really important to keep your stops tight. Okay, if you could get your stop tight on this trade at saving 20 pips, when you come up here and you're up 50, if you were risking 3%, you're up 7% on one trade. Okay, so with any of these strategies, always try to consider how tight you can get the stop without getting stopped out. And this is the type of strategy where you normally don't need a lot of room. Because of the confirmation from the sentiment chart telling us there's heavy buy orders, you could easily put your stop just below there. And if you look where that's at, you're sitting at about let's see, what do we got here? About maybe 30 or so pips. So definitely that could have easily been done. And look at that move. I mean, you don't even have to get out here. Maybe you only scaled out here, but look what happened. You got a 150 pip move off of that signal. So that's why a simple little false breakout strategy can go a long way if you manage the trade right. You'll learn that exits play a big part, and the entries almost become easy once you figure that out. Once you figure out the exits, and we've already had several trainings that are on the blog, TradeWestForex.com/blog, and you can review some of those to get some ideas on how you can ride these moves out and exit for maximum profits and keep your risk as small as possible. Okay, so that's one example now. Let's go ahead and let's look at another few examples. So that's right. You don't have to even win 30% of the time. You're just holding out for those big moves, and when you get them, it's going to make up any losses you've had plus more. So okay, so yeah, let's look at some more examples here. Let's see if there's any more on the US yen that we can look at while we're here. Okay, so let's see. There was an area right here What day was this? Let's see, the 8th, 9th, 10th, 11th, 12th, 13th, about the 14th. Right around the 14th, we can go look at the USD then and see what we had here. Let's make sure I'm on the right. Okay, so I'm seeing that it dipped down. It might not have had a false breakout here. It looks like it was a test of support. It doesn't always have to break out, but those might give you the stronger moves because it pulled a lot of traders out of the market. So now they might change their sentiment or their decision on which way they're going to trade and help push the markets back up. So let's see, that was about 99.20 or so. Okay, maybe we just need to go back a little bit more. Yeah, it looks like it was right in here. Okay, so yeah, it was a false breakout. Here you go. Here's a little bit of a support area. There's several candles to the left, several candles to the right. So you've got a legitimate swing low over here. That if you look right here, this candle barely penetrated through, but it did indeed stop some traders out. Okay, so right there, we look for the market structure low. Okay, and I can see low, lower low, higher low. Break of that high happened right here. Okay, so let me draw that again. Market structure low is low, lower low, higher low. Breaks the high is confirmation. We can already see on the sentiment that right here, we know the wick came down a little bit here and went through some of these limit orders, but could not take them all out. That green area is still sitting there. And here was that little low right there that we're seeing on the chart, right over here. Okay. So there you go. You've got another really good trade. It's in the direction of the trend. False breakout to the downside. Confirmation by market structure low. Perfect entry. Almost, minimal drawdown, a few pips tops, and you had, a very fast move up. 73, 110, 111 pips to the top there. Really smooth trades too. You'll notice these types of setups a lot of times just take off because you're timed it just right. And they take off, might pull back a little bit. If you hold on through the wave, scale out along the way, you can catch a pretty good move. Okay. So let's see if we can find an example, if there's anything setting up on the current chart. See if we can get any ideas on something that's not from the past. These setups might not happen. They're not going to happen every day. But if you just check on your charts once a day for these setups, you'll find them, and they do work out pretty dang well. So let's see here. Let's just skim through some of our sentiment charts. I've got this set on month, so I'm seeing each one of these lines here at the top is a day, and so that's the chart I'm using. That kind of somewhat matches up with the 1 hour chart. So this is not a 1 hour chart. This is based just on number of days. This is giving you 30 days. So it's a little different than a time frame chart, time period chart. Okay, so let's see. This one here, we don't have anything on that. Let's go through a couple of these. Here you go. Here's one. Australia dollar is sitting right on support right now. Okay, let's go take a look at the Australia dollar chart. Okay, so here you are sitting down here. If you're wondering if maybe this is going to be the bottom, if it's going to turn to the upside. Well, you do have a market structure low pattern forming here. However, you're against this major trend. So if you do decide to take trades like this, you might finally be at the bottom if you're trying to catch bottoms, tops and bottoms, but I would take it much more conservative as far as my risk percent on the trade. Okay. Don't look at it as if I put a 15 pip stop in, that's less risk. Your risks should always be determined by a percentage, how much money you're going to lose on the trade, not how many pips. So when I say take it conservative, you can use a 100 pip stop if you want. Just don't risk more than, maybe half what you normally would risk or less. If you normally risk 2%, risk 0.5% or 1% on this type of setup. Okay, but if we look at this, sentiment chart, you'll notice on the way down it had a significant buy area here that it broke through. However, during the breakout there really wasn't any, there wasn't really any market structure low pattern that formed during, that area of support that it was testing. It just clearly dumped right through it. So you'll notice a few things like that. But the main thing here was on the current price, we could take this trade, but it's against the trend, so it's going to be pretty risky. So I think we've gone over enough examples. Hopefully that all makes sense. Let's just make sure, let me explain how this is going to work when you download Informer. If you don't already have this tool, when you first download it, you'll click onto the Market Sentiment tab here, and then it'll say select a pair and select display last, how many, if you want to see the last 24 hours of data, 7 days, or a month. Okay, and that's how it works. Really simple. Look for your market structure lows and highs and compare them to the sentiment. Before we wrap it up here and give you the link, I want to make sure I explain market structure highs. We've only looked at lows, so let me just really quick, let's do one more example of a market structure high with this setup so you can understand both sides for shorts and longs. Okay, so let's look through a couple more of these. Okay, so here would be one that I'm sure it's against the major trend, but let's just take a look at Euro Australia dollar. Okay, so Euro Australia dollar has a huge trend that took off here over the last 2 days. So it's definitely against the 200, but let's just show you how the market structure high works here. Okay, it's just like the low. We look for 3 bars. We need a high, and then we need a higher high, followed by a lower high. Once you get that, you wait for this whole thing to close. This bar needs to close. Once this bar closes, and this is all confirmed, whatever the low is at that time, maybe it'll be right here. Okay, if that candle comes down, then when this bar here opens up, you sell when it breaks right there. Does that make sense? So if this was not a major uptrend, this could be a good trade following the market sentiment and everything matching up at that, these orders starting to show up. And actually, this is not right. This is supposed to be red. This actually shows more possible continuation when you see green above, because those are buy stop orders, meaning traders want to buy as it moves up, which puts more pressure to go up. So when you see red, you would want to see red here. Okay, so like over here, see the red was quite a ways up there, but the wicks probably did head up right into here. And let's see, that was on the 8th. Let's see, 8th, 9th, 10th, 11th, 12th. Like the 12th and 13th. So if we go look at that example, okay, that would be right in here. So this candle shot up, didn't quite give a false breakout, but it definitely tested there and gave a short signal down. So here's your market structure high. Let's get another color here. Okay, so here's your market structure high right here. High, higher high, lower high. Breaks that low, and you're short. Okay, so it gave a decent little pullback there of about, let's see what it did. Gave about 66 pips to the bottom. So that's how you use this false breakout strategy for selling, and with market structure high, the market structure high pattern. Okay, so as you can see, another simple strategy, just like we taught with the moving average bounce or moving average simple trading strategy. This is another one that's pretty easy to follow, pretty straightforward, not a lot of rules, but it works extremely well. So I hope you guys will go and practice this. Take your charts over the weekend, drag them all the way to the right, turn off auto scroll, and start walking this stuff forward. Using that F12 key, you can practice these methods and get familiar with them, get confident in them, because that's really what counts with any of these strategies is you need to be confident that they're going to work, so that way you'll hold on to the trades for as long as possible to catch these big moves. So let's go ahead and let's do the Q&A now. I'm sure you guys have got some questions. I can already see them stacking up here in the chat. Okay. Is this just as clear? Let's see. Otherwise, yeah, that's what I did go and show some current, some actual setups that were right on the current bar, so you can get an idea how it works. When you're at the very far right of the chart, like we are, when you're trading real time. So yeah, that's, yeah. So you're going to see, you're going to want to look only at what's actually right above the current right hand, the very far right, and then look right above. So yeah, you don't go look over here, and then old resistance that's completely taken out. For example, this green area here, you wouldn't say if the market was here, you can use all this dark green. It needs to be what's current, because that's telling you the current market sentiment, basically, of speculators and traders on the market, whether they are putting heavy orders to go long, with their or stop orders, or to go short. We want to see it on the current price. Sure, you can use it on 15-minute charts. You can use this information on any time frame, really. You just have to you can try and match up the display last here. I need to give you guys this link, so let's do that really quick, so you guys can get the tool downloaded. Okay. So you can download the Informer tool at TradeWestForex.com/Informer, and that will give you access to the market sentiment. And like I said earlier, this is not a trial that's going to expire at some point. It's all 100% free, all the tools inside. There's some things such as like Forex 3D stuff, like the mirror, that you won't have access to. But everything in there, as far as what we're teaching in these weekly webinars, is all 100% free. Okay, so TradeWestForex.com/Informer. That's where you can download the tool. We've got all kinds of things coming up for it. In the next couple of weeks, we'll have some more new tabs and indicators built in for you that we'll teach about. Let's see what else we've got here. So back onto the 15-minute chart question. Let me go back on that and just show you what you would kind of do here. Okay, so if you switch it down to, say, the last 7 days, if you go to a 15-minute chart, you'll see that depending on how far in you're zoomed and how much you can see on your chart here, you're probably only going to see a couple days. Okay, so to get it to kind of match up, you're going to have to either zoom out quite a bit or switch this down even further. If you go down to 24 hours, that does look similar to maybe a 15-minute or 30-minute chart, depending on your zoom level. You can see 24 hours, let's see, 1915 to 1915 right here is 24 hours ago. Okay, so if I want to kind of match them up, I can zoom in, so it looks about like that, and now that's what we're looking at here. So you can see if I put this into a line graph, I can get them to kind of match up. Okay, it won't be exact, but the patterns will be similar, right? You can see it's pulling down over here. Here it is pulling down. You can see this big run up. That's this run right here. Okay, so you can see how it lines up. I'm going to turn this to always on top there so it doesn't keep going behind. Okay. So yeah, that's how you could do it on a 15-minute chart. Let's see. So yeah, I mean, you have to just kind of, if you wanted to do a 4-hour, you might go up to the 7-day, maybe the full month, and you're looking at the last 7 days, so obviously you just want to zoom this in to match that. Okay. Either zoom it in or go up to the month. To see a month of data, you're looking at zooming out to about right in here somewhere. Okay, so there you go. It looks similar. Okay. Let's see what other questions I've got here. Can you add more pairs? There's not an ability for it to add more pairs. The source of this information, we're kind of limited what we can do with it and what we have access to. But we have, most of the major currency pairs, and so if there's a pair that you don't see on here that you like to trade, maybe they'll come out with more pairs with this resource at some point, but you might just want to focus on just these pairs that it has. I mean, there's quite a few, as you can see here, including gold and silver even. Let's see. Over the last few days, the U.S. yen, let's look at the U.S. yen. Okay, U.S. yen. It's definitely not going to win. It might only win half the time or less. You don't the key is with these strategies, a lot of you are looking for something that's going to win 70, 80, 90% of the time. Well, with those strategies, you almost never see a good risk-to-reward ratio. So this strategy is completely different, where maybe it doesn't win half the time, maybe it wins only a third of the 33% of the time, like someone mentioned. But the key is it has such small drawdown potential, you can keep your stops tight, and you can easily get 1 to 2, 1 to 3, 1 to 4 risk-to-reward ratio, which then you don't have to win even half the time. You can do really well. You always have to keep that in mind with any strategy. It doesn't matter what your win rate is. It doesn't matter that it fails for a month. The next month you might have 1 or 2 amazing trades that wipes out all your gains, or your losses for the whole quarter. Okay, but let's look at this, for example, this example here. So U.S. yen, let's see if I'm looking at from the 22nd, this is about right. Okay, well, it's been in an uptrend. So if you were trying to sell at any of these resistance, these red areas, the only one that might have worked out is this one right here on, what is that, like the 7th? Yeah, right here. So this is was a false breakout. You can see it clearly tested higher, broke out of that resistance, okay, and there was this red area over here that it went right into those orders. That put pressure on the market to turn down. Now you have a high, higher high. This was likely news. So I mean, if you see something like that, the lows clear out here, you're probably not going to be able to jump in on that one. You would have had to get in before the market structure low pattern, knowing that as it pulled back really aggressively there at the resistance, you might have been able to sell. But the point is, this was against the trend. So even if you tried to sneak in there and get something out of it, it was against the 200 EMA. Any of these were. Even up here, when it started testing this area, any of these would have been, you might have been able to get in here and squeeze out a few pips, but they're against that major trend. So you'd take them more conservative, like I said, and instead look for these buy trades. We found that one right there that we talked about from that green support, market structure low. Then you had this one right here, and that was this this break of this support right here. Those are the ones that you want to look for. So it's been working. Someone was thinking that it hasn't worked too well on the U.S. yen. There was a comment on that, and as you can see, it worked really well if you followed the trend. If you didn't, you still could have caught some small profits possibly, but it was definitely against that major trend. Okay. Hopefully that clears it up for you, for those of you that were questioning on that or want to see the big picture, I guess, on the U.S. yen. Yeah, we definitely record all of these. We understand everybody's got a busy schedule, and so you can, and some of you want to go back and watch the replays because I do move kind of quickly. So yeah, you can definitely go back in and watch the replay. We usually shoot out an email on Mondays with the replay. Okay, so you can look out for that, or if you just go to tradewestforex.com/blog, I'll post that link in here. You can bookmark it. We actually we write up a little article about what we talk about today. We write up an article on the blog post with the video replay, and you can actually go watch all the previous ones there as well. So it's tradewestforex.com/blog. I posted that in the chat. Yeah, I can re-show you the link for the indicator for the tool. Okay, tradewestforex.com/informer.